this concept of allowable, disallowable, taxable, and taxable. Now, the most important thing to start with, you can never say allowable income, right? Allowable or disallowable is only for expenses. So this animal called expense in taxation, they can either be allowable or they can be disallowable. Kwa lugha ya mwananchi wa kawaida, something that is allowable ni kitu yenye inakubalika. Ile expense ambayo tunaiallow ni expense ambayo tunaikubali. We accept it as a correct expense of the business. And for that reason, it should reduce our profits. So, why is it allowable? Because we recognize it as a genuine expense of the business, and that's why we allow it. Not English, we allow it to reduce the profits of the business. So allowable, this one is the correct business expense. So allowable expense is the correct business expense. Now, disallowable, this one is the wrong expense. So when you say that an expense is disallowable, why are we disallowing? Because sisi ni KRA na accountant wa kampuni fulani alitengeneza income statement. Whatever we see in that past paper is not our work. Hiyo ni kazi ya accountant wa hiyo kampuni ama hiyo biashara. Accountant amefanya makosa mengi. Some of the mistakes that the accountant did are he allowed the disallowable expenses. He deducted wrong expenses. He deducted some of the expenses that are not supposed to be deducted. So we need to make some corrections. And when we're making the corrections, we remove an expense. Where are we removing the expense? We are removing the expense from the profit. From the profit. If profit iko hapa chini kabisa, the net profit is what we are correcting. In arriving at that net profit, expenses zilikuwa deducted. Expenses zilikuwa less. So kuna expenses ambazo zilikuwa deducted na ni wrong. So expenses reduced our profits. The only way to correct such kind of mistakes is what? To add back the disallowable expenses. So we are removing the wrong expenses by adding back. Why are we adding back? We are adding back because whatever we have is the net, the profit that we remain with after deducting the expenses. Allowable incomes. Incomes, they are either taxable or what? Not taxable. So taxable income, just like the allowable expenses to allow, incomes to not tax. So the taxable incomes, these are the correct incomes. The non-taxable incomes, these are the wrong ones. The wrong income. So if there is a wrong income that is included there, we remove it. And the only way to remove an income from the profit is to do it less. That's why we add back the disallowable expenses and we less the non-taxable incomes. That's how. So in that little explanation, let's go to that question. To mark here, is it doing or marking? It's marking. So tubadilishane vitabu. Kwa kula acha mchezo. Na vitabu za kubadilisha. Kuna maswali zingine nikiuliza mniangaliaje box. Now, question 4C, page 10. Now we are told that Mambo, Moto, Mutoka are in a partnership sharing profits and losses in the ratio of 2:1. So they share profits and losses in the ratio of 2:1, respectively. Then wametuambia the statement of profit or loss for the year 2022 was as follows. Gross profits in your biashara. That's an income of the business, taxable. Ona hiyo, taxable. Kwa sababu ataiguza. Sale of delivery van proceeds. Is it a taxable business income? Page 10. We are not in the business of buying and selling the delivery van. Whether that is not a taxable business income. Kwa hivyo tutafanya nini? Tutaitoa. Tutatoa hiyo income. The only way to remove an income is to less. Sasa, we less the, now we have the expenses. Advertisement, is it a genuine business expense? We must market and advertise. So here is our depreciation. Is it allowable? It's a disallowable expense. We don't know depreciation, but we know capital allowances. Right? Rent and rates. Is it a genuine expense of the business? Lazima tulipe rent. Kwa hivyo ni allowable. General expenses, are they allowable? Yeah? Kumbuka si general bad debts. General expenses isn't allowable unless otherwise stated. Many students confuse it with general bad debts. General bad debts are disallowable, but general expenses ni zile expenses kidogo kidogo ambazo wamezisum pamoja. So they are fully allowable unless to pass to additional information. VAT. Is it allowable? We cannot allow tax. Still, taxable income can never be affected by what? By tax. You look at tumeiva. Bad debts, are they genuine expenses of the business? Yes, if what? Yes, if specific. Come on, specific. So, subject to confirmation. Purchase of furniture, is it a genuine expense of the business? About the answer is a big no. Because when we buy furniture, we don't take it to the income statement, we take it to the balance sheet. What goes to the income statement is our depreciation. Our depreciation, which we call capital allowances. So that one is disallowable. Unajua accountant kampuni ilinunua furniture badala kupeleka kwa balance sheet wakapeleka kwa income statement. Hiyo ni kuibia serikali. Want to claim more expenses. Salaries and wages, are they allowable? Lazima tulipe salaries. Unless kama kuna partners. Still. Legal fees. Can you say subject to confirmation? Goodwill written off, is it allowable? Alafu acha niwaambie siri moja. Ile ni unashuku, it is allowable. And normal, the one you doubt, it is allowable. Like now, see, you are doubting the goodwill written off. Where it is allowed. You know, a Syrian than the exam. You know, a statement kanaka akaelewe where it is allowed. Wewe ni KRA kama uelewi kitu, you don't punish yourself, you punish the taxpayer. That's how. Yeah, and under normal circumstances, upon ukweli. Like goodwill written off in taxation, we don't know anything with goodwill written off. Goodwill is an intangible asset. Still. And an asset, the only thing we know that reduces the value of asset is capital allowance. We don't know depreciation, we don't know overhaul, we don't know amortization, we don't know writing off your what. We only know capital allowances. Interest on capital for Mambo and Moto, is it allowable? See how many partners? Maybe it is allowable still. and wakara na net profit ya 1597,000. Additional information, advertising expenses include 120,000 spent on acquisition of a new sign. New sign, is it allowable? It's a fixed asset, right? Maybe it is allowable. General expenses comprised partners end of year parties in January. Sio ni kujipenda. Hiyo ni private expense, kwa hivyo ni disallowable. Staff catering services. Staff ni sawa. Hiyo tuna encourage, sio? So staff catering, that one is allowable. Embezzlement by cashier. Cashier maamua kutuibia. Wewe kama KRA, cashier ameibia kampuni ambayo una audit. Utakubali kwa expense. Sitawambia negligence yao. Maybe una disallow. Bad debts represent the general provision made for the year. Are they allowable? So generally disallowable still. Legal fees comprise the following: parking fines. Are they allowable? The fines and penalties cannot be allowed, right? Settling a dispute with the customer. Sorting out issues with your customers, that one we allow still. That one is allowable. Appeal on tax assessment. Any tax matter is allowable, right? Then of course, investment allowances for agreed at 380,000, the Commission of Domestic Taxes. Prepare adjusted taxable profit or loss. Hata wakati kanasumbua unaanza na kuandika kichwa. Bale kichwa ni 1 mark. Just giving so and so taxable income computation, unapata 1 mark. So unaanza kutafuta the 49. So let's see. Hi. So najiita mambo moto na kutoka. We have mambo moto and kutoka. That is 2022 adjusted taxable income computation. Let's try to taxable income computation. So I think you can put the figures in thousands. Then we start from where? The reported net profit. Only report net profit yangapi? I think 1597. So tunaanzia hapo kwa 1597. 1597. Now, in arriving at 1597, there are some expenses that were wrongly deducted. So we add them back. So we add back, what is the name of those expenses? Disallowable expenses. So we add back the disallowable expenses. Now, Nancy, for additional information, can we add back a new sign, not number 1? So new sign will cost how much? 120. When you among the advertisement, you're wrong still. Then general expenses, can we add back partners and the party? Partners and the party of how much? 150. Staff catering is okay. Embezzlement by cashier, can we add it back? Embezzlement by cashier, 200 and what? 210, right? Number 3, bad debts represent the general provision for bad debts. Can we add back the bad debts? Bad debts, the general provision, how much are we adding back? 250. Legal expenses comprise, can we add back the parking fines? Parking fines represent 130. Settling dispute with the customer, that is okay. Can we add back tax appeal? So tax assessment appeal, that is 210. Note number 5, the capital allowances less. True income for expenses there too. Due. Advertisement, we sorted, right? Can we add back the depreciation? Add back depreciation in the Sangapi. 148. Rent and rates is okay. General expenses sorted. Can we add back VAT? VAT ni yangapi? 150. Updates to share add back. Can we add back purchase of furniture? When you buy furniture at the Sangapi? 620. Salaries and wages is okay. Legal fees is already sorted. Can we add back goodwill written off? That works. 225. Can we add back interest on capital? So interest on capital, mambo ni yangapi? Mambo ni ya 80. Alafu moto ni yangapi? 140. So zile expenses tuko na shida nazo, tushazi identify, tunazirudisha. Walikuwa wamezitoa, tunazirudisha. Kwa sababu ni wrong. That's why this figure, we shall get it to add back to our profit. How much is it? 24? 34.33. Then we less. Can you start by lessing capital allowances? The capital allowance ametuambia ni ngapi number 5? 380. Then can we less ile wrong income, sale of delivery van? Sale of delivery van walipata ngapi? 49. So how much are we lessing? 17.8. So do we have our adjusted business income? So this plus this minus this. 250. Na allocation nayo sasa. So the allocation schedule number 2 now. So for the allocation schedule, tuko na partners wawili kama ni watatu. Mmoja anajiita Mambo, mwingine anajiita Moto, na mwingine ni Mtoka. Alafu tunataka Toto. So our figures are in thousands of shillings. Hakuna mwenye alipewa salary, sio? Hakuna salary kama hivyo. The only thing that is there is an interest on capital, right? So therefore, you have interest on capital. Mambo got interest on capital of how much? Okay, Moto akapata yanga. Mtoka naye 0, sio? This is 220. Nothing else. No salary to partners, no interest on drawings, no commission, no bonus. So I only need to get now the share of what? The share of profit. Then I have the business income. So from the business, you get how much? 2250. What is the balancing figure to be shared? 20. 20 30. Commission 20. How are they sharing? 211. Yeah. So we are about 2, we are about 1, we are about 1, totally 4. So 2030 times 2 over 4. 11, 10, 15. Na hiyo nyingine 5 or 7.5. Then 5 or 7 points. So now add those. This is 1095. And this is 647.5. Do you have any other income? What's up? So the total taxable income 1095 for Mambo, 647.5 for Moto, and 507.5 for Motoka. But I what I wanted to say. But confirming in today. What sitting was it? I got 22. Page 21, let's take it out. So August 2022, question 5C, page 21. We are told that Kamala, Susan, and Kubasu, okay, all there. So Kamala, Susan, and Kubasu are in partnership, trading as Kasuku traders, sharing profits or losses equally. They have provided the following statement of profit or loss for the year 2021. Gross profit ya biashara, ndio. Loss in the business income. VAT refund, is it for the business? It is tax, right? The tax usually said to make a tax. Taxable income cannot be affected by tax. So therefore, VAT refund we shall remove. It's a non-taxable income. Foreign exchange gain, taxable if realized. So we need a statement from the examiner. Kama hakuna, we go with an assumption. Dividend income, is it for the business? Tutoe kwa biashara, ndio. Tutoe kwa biashara. It's an investment income. First things first, remove it from the business. We can take it to other incomes depending with the source. Ndio. Kama imetoka kwa cooperative societies other than SACCOs ama hapana. Profit on disposal of furniture, the taxable business income. Sini sawa na hii tumezungumzia hapa. The sale of delivery. We are not in the business of buying and selling furniture, right? Kwa hivyo kiasi ya biashara toa. Na tukisema toa, na tunazungumzia income, it's less. You remove it from the profit. The only way to remove an income from the profit is to do what? To deduct. So, because incomes increases our profits. So kuna hizi profits zetu ambazo zimeincreasiwa na incomes ambazo ni wrong. So our profits are overstated. When the profits are overstated, you correct by lessing. There are some expenses that affected our profits. There are some wrong expenses that affected our profits. So meaning our profit is understated. So expenses in a less. So to correct such profits, we add back because the profits are understated. Alright. On this rental income that is true. Now the expenses, insurance premiums, allowable, disallowable. Insurance lazima tulipe, ndio. Bora zikuwe assets za biashara. Kwa sababu iko kwa income statement ya the business, then the expense ya biashara. Unless tuambiwe story nyingine. So insurance is allowable, legal fees allowable, disallowable. Subject to confirmation. Depreciation, is it allowable? Disallowable. We add back, right? Repairs and maintenance. Are they genuine expenses? Lazima to repair to maintain assets that VAT paid. Is it disallowable? Yes, it is disallowable. Hata tumeifanya kwa hii, ndio. Hizi vitu zinajirudia. The more you do questions, the more zinajirudia. Sundry expenses. Allowable, disallowable. This one are general expenses. Kwa hivyo ni allowable. Next time wanatumia sundry expenses, wakati mwingine wanatumia general expenses. The same thing. Allowable unless told otherwise. Additional information. Interest on capital, is it allowable? It's allowable. Ndio. Tutai back. Motor vehicle expenses. Are they allowable, disallowable? It's allowable. Akimano na bianga ni kwa anzisha bila malizia. Allowable. Allowable. Ona kufanya timing alafu so that you also participate in the answer. Afanya timing kusikia ameshasema this. Ona malizia na nini? Na wakati akisema ni allowable so madhari zote I said allowable. But motor vehicle expenses are fully allowable, right? It is not purchase of motor vehicle. Isn't motor vehicle earning expenses kama fuel, story kama hizo. So the allowable. Customs duty. Is it allowable? It is a tax, remember, and tax can never be allowed. It's allowable. Custom duty, that is tax. And taxable income cannot be affected by what? Tax. Okay. Which cost? So the question is, which product is it? Hatupeanangi tu expense yote. In fact, we hedge expenses. So if there is no good explanation on an expense, we don't accept it. Nimegoja hiyo on what? As long as equal revenue item again. Because this is duty sana sana tunalipa tukiimport motor vehicle, import furniture, import I don't know what. If it's a fixed asset, then it should form part of the cost of the fixed asset. And again, if it is a revenue item, sorry. If it's a revenue item, become a VAT. Become a VAT. Si kama kuna VAT kwa sales tunatoa. Na VAT kwa purchases pia tunatoa. It's the same situation. So even customs duty on the purchases that we imported, just take it on. Because the taxable income should not be affected by tax. Accountancy fees, is it allowable? It's only professional. Fully allowable. Bundled doubtful debts. Allowable if come on specifics. Rates and rents. So the rent is powerful. Somebody can say kwa rates ni taxes ni sawa, but because of the strength of the rent, you're not fully allowable. Salaries and wages are they allowable? Yes, they are. Insurance. Oh, waka the net loss. So in arriving at that net loss, kuna expenses ambazo zilitolewa. Ambapo sisi kama KRA tunafeel wanatuibia. You see that? Now, sababu tunafeel wanatuibia, we come back and remove the wrong expenses, and that's why we do what? We add back. So let's look at additional information. We are told that insurance premiums include 282,500 paid to insure Susan's private car. You allow that? Just in private. It's allowable. Legal fees include parking fines, settling a dispute with the customer, appealing against tax assessment. It's allowable still. Court expenses for breach of a contract. Allowable if successful. Still. So examiner for silent, nataka uandikiwe statement or make assumption. Or bracket successful, weke dash. But itakuwa allowable. Then preparation of tender documents. They are given in biashara tunafanya. So tender documents, that one is allowable as business. Sundry expenses include interest charge on hire purchase. So hire purchase interest only allowable. Only allowable. Cashier visit by the cashier. Registration of a trademark. Trademark is fixed assets. When it's registration, it is allowable. Repairs and maintenance comprise the following: repair of furniture. Allowable repair. That one is allowable. Installation of surveillance cameras. Any fixed assets. But it is allowable. Cost of office furniture. disallowable. The partners took goods for personal use, which had a cost price of 25,000. The gross profit margin was 20%, as recorded in partnership books of accounts. Alafu akasema the investment allowances were agreed with the Revenue Authority at 1475,000 during the year. Just acknowledge. Then salaries and wages include salaries to partners for supporters, salary to partners, previous na advert. Now, let me explain note number 5. Let me explain note number 5. There are these two animals. One is known as margin, another one is known as markup. Margin is the profit on sales or profit on cost. The multiple, multiple. And now I'm going to either this or that. So now I'm going to go say my sales means the cost. So margin is the profit over what? Margin is the profit over sales. Sasa, alafu markup nayo. Markup is the profit over cost of sales. Na kwenye knowledge kidogo ya income statement, najua kuwa nikitaka kupata the cost of sales, nikachukua sales minus the gross profit is sales minus profit. Ndio. So kama GP, tupelekane tu pole pole, is sales minus cost of sales. Kama nataka cost of sales, cost of sales inaweza kuja ukina hii. Cross the equal sign, inakuwa positive. Profit. Now, what am I driving at? That kama nataka cost of sales na nimetoa sales na profit, I subtract. And if I want the sales, I take the cost of sales, then I add what? The profit. Now, let's look at that statement so that I explain what I'm talking about here. The partners took goods for personal use, which had a cost price of 225. Tumepewa cost price. Kama umepewa cost price, then you need markup. Because markup is the profit of what? Cost. If you've been given the cost price, then kindly you need markup. Come on, get to pay a selling price. Wangesema, the partners took goods for personal use whose selling price was 225. Come on, wangesema story kama hiyo. Then hapo tungetaka nini? Because that would be the sales. Margin is the profit on sales. Kama umepewa selling price, unatumia margin. Kama umepewa cost price, unatumia markup. Na examiner atakutrick hizi story. Like in this case, ametupa the cost price na ametupea margin. Sasa lazima tukuwa wajanja. I know that sasa ametupea profit on sales, sio ni margin. Lakini ametupa the cost. So lazima to find out getting what? Profit on cost of sales. Na kama nimepewa sales na profit, how do I get the cost of sales? I subtract. So I know that sales equals to cost of sales plus profit. And the cost of sales will be sales minus what? Sales minus profit. So in our case, let me adjust this a little bit. Wametuambia kuwa margin ni what percent? So hapa kwa margin ni 20 over 100. So profit ni 20, sales ni 100. Naweza pata cost of sales. Can I get it? Ila kama mali najiongelesha najua. Hata nishaiona. 20% ni 20 over 100, ndio. So ametuambia kuwa margin is 20 over 100. Can we get markup? Markup will be 20 over the 20 over 100 or 20 over 80. I'm one of the above. Huh? So hii ni sales na hii ni profit. Kwa hivyo nitachukua profit over sales minus profit. Leo unaangalianga unasema yeye kuja na hata ikikuja after all ni one mark ushajimakia. Inaitwa unrealized profit na bado itoe. Alichukua goods for personal use. Okay, when you are taking the stock at the end of the year, that stock was not there. So anything that is not in the closing stock, sinamaanisha iliuzwa. Ndio. That's why you take the opening stock plus purchases minus the closing stock to get the cost of sales. So among the cost of sales, tuko na drawings, which is wrong. So you need to remove something that we call unrealized profits. So hiyo unrealized profit ndio tunaenda kuipata kutumia kama formula. Sasa sijui kama niseme hivi, kama umepewa margin, denominator ni sales, numerator ni the same, zote ni profit over sales na profit over cost of sales. So denominator ya margin ni sales, denominator ya markup ni cost of sales. Sales zinakuanga mingi kwa cost of sales by all means. That is true. So kama umepewa margin na unataka markup, you will less. Sasa, so markup will be the numerator divided by the denominator minus the numerator. I'm complicating it more, but I'm making life easier. Kama margin, like 20% is 1 over 5. If margin is 1 over 5, markup will be 1 over 5 minus what? 5 minus 1, which is 1 over what? Does it mean 1 over 4? No. If margin is 2 over 7, markup will be 2 over 7 minus, which is that minus 2 minus 1 minus 2, which is 2 over 5. What if we've been given the markup over half? The margin will be amesonga mbali na ubao. Ili kusema kopeka. Sasa tumeungana tena. Sasa tumepewa markup. Tutafuta margin. Si kama umepewa markup unataka margin uta-add. Kwa hivyo ni 1/3. Sasa alafu acha tena nikwambie kitu kimoja. Kakiumana usiachie swali hapo. Siuendelee kujibu zingine. No, that's one of the mistakes that against students do. Kwa point fulani kana kutupa nje, alafu unasema hizo ndio unaachia hapo. So because of 1 mark, you end up losing all the marks. You don't do that. Ndio. Don't do that. Hi. So this is what is going to happen. We are going to less because we have unrealized profit that was claimed. Anytime you make the drawings of goods, inamaanisha kuwa your closing stock is understated. So wakati ulichukua stock at the end of the year, hizo goods hazikuwa ndani, and drawings is disallowable. Ndio. So when the closing stock is understated, profit is also understated. Remember, the closing stock and sales direct relationship with profit. Yeah. But now, because of the understatement of the closing stock, there's a profit that was claimed, which is not going to be realized. So you're not really affecting on the closing stock, but you're affecting in the profit. So we less the unrealized profit. So can you write the head? And you see what you're supposed to do. This time what we qualify head walisema wanajiita nani? So usianze kuandika majina yao yote. Wanajiita Kasuku Traders. So Kasuku Traders, the 2021 adjusted taxable income computation. Again, you can put them in thousands. We start with the reported what? Reported net loss. Of how much? 956. So it's a loss, you put it in brackets. Then we add back. And then the disallowables. Add back the disallowable expenses. Additional information. Can you start with the insurance of Susan's private car? The insurance of private car. Waliinsure pesa ngapi? 8.5. Can we add back parking fines? $150. Settling customer dispute is okay. Appeal against tax assessment. Can we add it back? Add back how much? 62.5. Court expenses for breach of contract. Successful, unsuccessful. Make an assumption that makes our life easier. So that we put the dash. It becomes allowable. Tender documents is okay, it's there. So sundry expenses. Can we add back interest on hand looking embezzlement? Section number of CPR. I leave out the salary. 565. Trademark registration, can we add it back? Of how much? 81.25. Repair of furniture is okay. Can we add back installation of surveillance cameras? So the surveillance cameras, 812 point what? 812.5. Do you have office furniture? Kabai office furniture ngapi? 520. 525. The partners took goods supported after the UPS to less. Otherwise, can stories that would add back na less to add back the drawings at cost, then we less the drawings at selling price. But if you have selling price, you have to examine the next time that one here. The partners made some drawings whose cost was 225, although their cost was 300. Their selling price was 300. So you know that drawings are disallowable still. So the difference between the 225 and 300, that is the unrealized profit that you're looking for here. So we're gonna options B. You can add back the cost, then you less the selling price. Or you simply get the profit, then you shall less. So since you're just going to look for the profit. They're not interested in the selling price. But only check a selling price, they're gonna mark up. There's a profit, then a sales. Hi, so that one you shall take care of it, but investment allowances penny, but can we add back salary to partners? So Kamala alilipwa ngapi? 600. Susan tukamlipa salary ya ngapi? 450. Then tuko na Kubasu. Yeye tukamlipa ya ngapi? 225. So rudi kwa the expenses zako tuone insurance premiums allowable, legal fees to share deal nazo. Can you add back depreciation? So add back depreciation ya pesa ngapi? 575. Repairs and maintenance we've sorted. Can you add back VAT? So VAT paid 233.75. Sundry expenses, that is okay. Already taken care of it. Can we add back interest on capital? Interest on capital. Kamala tulimlipa interest ya ngapi? 7.5. Susan tukamlipa ya ngapi? 185. Then Kubasu 146. Motor vehicle expenses is okay. Can we add back customs duty? So add back customs duty. That is 227. 227.5. Accountancy fees is okay, but and doubtful debts. Do you have any information about them? So an assumption is needed. Specific or general? You make an assumption that makes your life easier. Specifically allowable. Then after that, what else we have managed? Rent and rates is okay, salaries and wages is okay. So you already have everything to add back. So let's check hapo kwa kuless sasa. So let's check what we are lessing. By lessing the UPS and realized profits on drawings. China UPS ikatona andika include and realized profits on drawings. Now, tumepewa margin na tumepewa the cost of drawings, not the selling price. So therefore, hapa we shall take 20 over 100 minus 20. Hope that explanation makes sense. Times the cost of how much? 5. So 20 over 80 times 225. How much? It makes 0.25. You also have capital allowances. $14 1475. Rudi kwa income zako pale juu. Can you let's VAT refund? One or 2.4. 102.5. Foreign listed gain. They are silent. Realized or unrealized. They can realize which is their gas. So letter of saying what? Realized. So that we can equal realized is taxable. It's taxable. And what are we removing? The non-taxable. You're removing the wrong incomes. Equal realized in a correct income. So dividends. Can you remove them? How much are they? 562.42. What is the money next? So I may affect profits there too. Profit on sale of furniture. Picha pesa ngapi? 591. Then we have rent for income. 400. Then you can do for me the allocation schedule. Hapa kwa allocation schedule, kuna partners wanajiita nani na nani? Moja ni Kamala, mwingine ni Sultan, alafu mwingine ni nani? Basi. Then we have their totals. So to pay salary, 600 for Kamala, for 50 for Sultan, in 225. What is the total for that? 1275. We have interest on capital. Interest on capital, Kamala is 475. 185. Now mwingine 140. Total ni ngapi? 7. Hatuna commission, hatuna bonus, hatuna interest on drawings. So therefore, we need the share of profit and loss. Share of loss. Then you have the business loss. From the business, we make close to the 429.75. So what is the balancing figure? Hapo ndo kila mtu ako na yake. Peleka kiumana wewe fanya hesabu hivi. 175 plus 738.5 plus x equals to minus 429.75. Then work out for x. See yote inakuja inakuwa minus. So kiweka zote pamoja inakuwa minus ngapi? Alafu to be sure ukishapata hiyo kitu, hii answer hapa, jaribu kufanya hesabu uone kama utapata hivi. The balancing figure. From the business we made the loss. So total yetu ni loss. So what should you add to this to get this loss? So nikasema tunaweza tumia this format. 1275 plus 738.5 plus x. My answer should be this. What is x? Hizi zingine zote zitakuja side. Zote ziko minus ndio. That is minus this, minus that. Inakuja hapo. How are they sharing profits and losses? Equally. So divide by 3. 814.1. Yes, sir. We are making class in Yorosha. Hatukupewa interest on drawings. Tulipewa tu drawings. Tulikuwa tuna drawings of goods, but there was no interest on drawings, right? Remember? We only have the drawings, of course, we don't have the interest on drawings. Yeah? Right. The loss is this. How am I arriving at this? Now our balancing figure. This is what I'm looking for. And that's what I them up. What should you this plus this plus x equals to this? So what is x? What is this question mark? So should we do our balancing? Sasa. So hapa najua mnaweza pata yani hesabu ya kujumuisha ama kujumulisha. Hesabu ya hiyo. Other incomes. Tuko na dividends. Hapo tuambie the source make your life easier. Tuko na rental. On a rental, can we say residential? Also to make our life easier. And we have our total taxable income.